I want to thank you for giving me this opportunity today, but I more want to thank all the people in the audience for taking time out of their trading day to come here today. You know, you guys are realtraders.com, and I'm going to make the assumption that many people out there listening are already traders, but I'm also going to make the assumption that many want to be traders. And I'm going to tell you, I think at the end of my presentation, you can all be traders, and you can all be better traders than you have been before. And anyway, I'm kind of excited. It's Friday, the market's open. I've made a few trades today, and I got to clear my mind here a little bit. And anyway, having said that, let me get into it. This presentation is called Trading Weekly Options Using Math to Generate Fantastic Short-Term Trading Profits. Now, when I say math, I'm talking about arithmetic. I'm talking about addition, subtraction, multiplication, and the dreaded division. Right? We don't ask you to do squiggly line math here. Right? There's addition, subtraction, multiplication, and the dreaded division. Again, what I call simple arithmetic. I'm going to show you what I consider fantastic trading profits, and certainly what I consider short-term, and I'm going to ask you to agree with me at the end. Bottom line, what we're going to try and do is make money, right? And we do that by buying low, selling high. And I always mean to change this slide so I've got sell high above buy low so it visually matches, right? Buy low, sell high. You know, it's as simple as that. You know, thank you for coming. It's been great. Anyway, I do try and humor every once in a while. Again, I'm probably a little amped up from trading here, so let me take away all my energy by sharing what the lawyers tell me to share. Right? The disclaimer. All securities used in this presentation are for educational purposes and are not to be construed as a recommendation to buy, sell, trade any of these securities. Understand the marketplace is open right now, and I know some of you have an ability to look at the market while I'm talking. Some of you have an ability to trade the market while I'm talking. You know, don't pay attention to what I'm talking about here. And my company is Pulse Options, or my newsletter is Pulse Options, and I trade stocks personally, but I hate stocks. Right? You're at a traders conference, and your presenter starts out by saying he hates stocks. This is going to get better, right? Well, the one reason I hate stocks is because they're one-dimensional. With the exception of collecting a dividend, the only way to profit on a stock is to buy low, sell high. Where an option, on the other hand, is multi-dimensional, right? Options take into consideration more than just the price of the stock. And I'm going to get into some of that here in a little bit. Now, I want to start off by telling you my strategy is not to sell options. I'm not going to have you tie up thousands or tens of thousands of dollars trying to make tens or hundreds of dollars. Instead, we're going to try and tie up tens of dollars trying to make thousands, right? And because of that, the reason to trade options is how much do you use. I literally will show you trades that you will be risking less than $5, right? So if you have a cup of Starbucks coffee on your desk or in your hand while you're listening to me, look at that cup of coffee and say that cup of coffee could be a couple $100, right? Because reason to trade options, how much do you use and how much could you lose? You can spill your cup of coffee. All right. In the past, options were considered a leveraged directional play. If you thought a stock were going up, you could buy the stock, or you could buy a call option, right? If you thought a stock was going down, if you had an ability to short the stock, which most people didn't have the ability to short the stock, and therefore most people did not have the ability to trade and profit on stocks that were moving down, right? Instead, you could buy a put option and you can trade it directionally, right? I guess I've mentioned the two types of options, calls and puts. I'm going to make the assumption that some of you already know what I'm talking about, but I'm also going to make the assumption that many of you don't. So let me give you a little brief primer on options. Again, there's two types of options. There's a call option, which gives the buyer of that option the right to buy stock at a set price for a set time, right? The set price is called the strike price. The set period of time is until the option's expiration, but they have the right without the obligation. In a sense, a call option is a bet that the stock is going up in price. Again, historically, if you wanted to directionally profit by buying low, selling high, instead of buying the stock, you could buy a call option. Now, the second type of option is a put option. A put option gives the buyer of the put the right to sell the stock at a set price for a set period of time without the obligation, right? Without the obligation. The set price is the strike price. The set period of time is the expiration. It, in a sense, can be considered a bet that the stock is going down in price. Now, I say this, but puts are also insurance policies. If you own a stock, you can buy a put option as insurance in case it goes down on someone else, not you, right? So I'm going to be answering questions mostly at the end of my presentation, not right during the presentation. So bear with me. What I've discovered a lot of times is the question you're going to ask is the question that is a slide or two away, right? So I will go back. The questions won't disappear. I'll come back and look at them. Now again, so I've given you a brief understanding. There are two types of options: call options, stock going up; put options, stock going down. Understand there's 10, 12,000 stocks out there, right? It should not be your life goal to trade every stock out there, right? Your life goal should be to make money trading stocks. And there's 12,000 stocks out there. There's probably 3,000 or so stocks that have listed options, right? 3,000 stocks. So to me, if a stock doesn't have an option, I don't care about it, right? I start with a large universe and I whittle it down, right? I whittle it down. Besides options that expire every month, there are weekly options. These are options that expire every Friday, right? Again, set price is the strike price, set time is expiration, and we look at weekly options. Currently, there's probably 400 or so, right? And those are the ones we focus in on. What I do next is I apply my pulse system. Now, pulse is an acrostic. An acrostic is an acronym on steroids, right? An acronym is basically an abbreviation, right? CPA, Certified Public Accountant, right? That's an acronym. An acrostic is an acronym that spells something. It's a memory tool. It's a teaching tool. So I've created the pulse system. I look for P, profit potential; U, upside reward; L, low risk; S is for setups and strategies; E is for events, entries, and exits. Again, a memory tool. You should be able, if you follow my system, to make it rote, make it memory, muscle memory, repeat it over and over and over again. And my system, by the way, I've written a book. The book's The Pulse System: How to Turn Pennies into Hundreds of Dollars Trading Options. I filmed a number of videos. I write a weekly newsletter that gets published every weekend. In that newsletter, I start with a watch list. My watch list is I take those 400 stocks with weekly options, do math to them, find the best couple of dozen, list the dozen, right? In that section, I look back at a trade from the previous week with hindsight as an educational tool to allow you to gain understanding on how to trade. And then each week, I also pick from that watch list my top 5 plus or minus, right? This last week's newsletter, my top 5 plus or minus was one stock and one option specifically. Last week I picked VXX calls, right? And if you want to look, what VXX did from Tuesday through Thursday this week, because we got in and we got out and we took our profit, you'll see that that trade made money, right? I will review that trade in this week's newsletter, as I do every week. Every week, it's got a watch list, you know, looking back at a stock, top 5, looking forward, making predictions, and then a review of my previous week's predictions. Now, a couple things. I'm publishing every weekend and following up every weekend. I'm making picks, recommendations, right, for the upcoming week. I say the emperor has no clothes. When I pick something in my top 5 on one Saturday, the next Saturday we're going to review it. If I'm wrong, I cannot hide, right? The lucky thing for me is I don't have to hide. And all along I'm educating, right? All along I'm educating. So having said that, that's what my pulse system is. Let's get into each letter of the pulse system, the acrostic. P is profit potential. So here's a table of Amazon call options from June of last year, right? I've highlighted the box on the left is the opening price that day. The highlighted box to the right is the high price that day. And these are call options with strike prices, which is the price you have the right to buy the stock at. And they go from $300 to $340. And you can see that the gains are from 300% to 10,000% in one day. Now I started this presentation saying it's fantastic short-term trading profits. I think you will have to agree that one day is short-term, right? One day is short-term. And I like to think that 300% is a fantastic short-term profit, but if not, how about the 10,000%, right? Look at the 320 call, right? It's roughly in the middle. It opened at a dime. Now, options are traded in contracts with 100 shares per contract, so that contract was $10, right? That was a little bit more than your cup of coffee. It went to $8.95, which is $895, right? For some people, that's your mortgage. Some people, that's your car payment. Some people, that's your student loan debt, right? College, what a great deal, costs you tens of thousands of dollars. By the way, this is from June of 2014. I don't want you to necessarily leave, but if you looked at the Amazon call options from today, right? March 27, 2015, the 370 call, which expires today, opened at 68 cents. Now, mind you, this is less than 3 hours ago, so I'm going to say 3 hours is short term, right? I think you would agree that less than 3 hours is short term. Now, I don't know if you'll agree that from 68 cents to $2.73 is fantastic or not, right? That's like a penny shy of 400% move in 3 hours. Today, Amazon call option, right? And it's not just Amazon call options that move. How about Amazon put options? Here's a slide from 1 week after the previous slide, right? This is June 12th, 2014, right? Again, these are intraday moves. These are the put options. We have moves of only 300 to 500%, right? 300 to 500%. Terrible, terrible. I'm going to say it's short term. I'm going to say it's maybe not fantastic, but how many of you, right? Raise your hand. Press the raise your hand button if you made a 300% move today. And if you did, you're probably one of my students already. All right. Again, short-term, fantastic moves. Here's a VXX call option, right, from last year. I've got a chart on the left. We show the option moving from 8 cents to $1.90 in just a couple of hours, from $8 to $190. I'm going to say that's fantastic, and certainly in a couple of hours, I'm going to say short-term. Right? If that's not good enough for you, here's another option, a table taken from Yahoo. Option open at 2 cents hit a high of $150, right? That's 75 times in price. That's 7,500% move in one day. Again, I like to think it's short term, right? I like to think it's fantastic. I think you'll agree. Those are maybe a little bit over the top examples. So let me use examples from my actual students, right? Again, I'm a writer. I've been writing for years. I was first published when I was 14 years old. I wrote a logic puzzle for Dell Crossword. I'm very analytical. But I also consider myself a fairly good writer, right? And I'm a very good trader. But it's not what I do that counts, it's what my students do that count, right? Because you're not expecting to be me, you're expecting to become one of my students, right? You want to have the same results as one of my students. So here's a student. Now, interesting story, this student was on the TV show Shark Tank, and he sold his business to one of the sharks. So I'm probably only the second best thing that ever happened to him. Having said that, he bought the Tesla $155 call options in January of 2014. He bought 20 contracts, right? Each contract controls 100 shares. So he basically controlled 2,000 shares of Tesla for 60 cents a share. He sold them for $7.30. His $1,200 investment became $14,600. Again, I think that's fantastic. Short term in a day, $13,400 gain. All right, same student, FCX, Freeport-McMoRan. Freeport-McMoRan, this is a copper miner. We have a system to buy Freeport-McMoRan options around a dime, right? These closed the day before at 4 cents. They opened the day at 4 cents. They traded up to 35 cents. This student bought these at 4 cents, sold them at 32 cents, right? That's an 800% profit on a 9 times move. Now notice the date. This is November 7th, 2013. You're probably saying, great, Chris. Thanks for having an example from a year and a half ago. How about something a little more current? Again, notice the date, November 7th, 2013. Here's November 7th, 2014. 1 year to the day, we had an FCX option that, darn it, it only moved, what, four and a half times in price. It went from 8 cents to 36 cents. Again, more current. And you might say, Chris, this is still from November. How about a more current trade still? I'm going to say, how about a week ago today? This is an email from another student. It's March 20th, 2015. I bought 500 FCX March 17.5 calls for 15 cents and sold Friday for 80 cents around 10:30. Now, a couple things. 500 contracts. The minimum is 1. Right, so we'll look at his results, and then we'll scale it down, because this guy's been a student for a while. He's making some money. Anyway, 500 contracts at $15 a contract is $7,500. He sold for $80 a contract, which is $40,000. He made $32,500 trading FCX a week ago today. Now, if a person didn't have this big account, they could have bought 50 contracts for $750 and sold them for $4,000. If a person didn't have that big an account, they could have bought 5 contracts, right, for $15 a contract, which was $75, and sold them for $400. Right? It's a scalability thing. Our options are inexpensive. As you make money, you can trade more. But the barrier to entry is so small, right? This contract was $15 a contract that went to $80 a contract. Now, that's maybe not a typical email that a guy makes $32,000 on one trade. I do get those, you know, more often than you can imagine. But let's look at a more typical trade. All right, here's the guy. This is an email. It says, great call on your updates regarding Chipotle Mexican Grill and FAS. FAS is the 3x bull banking stock sector. He said at 9:35 a.m. Eastern, I bought 10 Chipotle Mexican Grill January week 4 500 puts for $1.95. Right, that's $195 a contract. 10 contracts is $1,950. He paid $15.35 in commissions, and he bought 10 of the January week 4 85 puts for 35 cents, which is $35 a contract. 10 would be $350. Also paid $15.35 commission. As the attached screen shows, I closed out both transactions for a one-day net gain of $6,538.44. I want you to agree, one day is short term. Now, he used the word fantastic, not at my prompting. This was an unsolicited email. So $6,538 in one day is fantastic. Let me show you why his $6,500 gain was typical. Notice the dates and times, right? His buy orders are on the bottom. He bought at 9:35 and 9:36. The market opens at 9:30. He followed the system, right? We chose the options, right? The stocks to buy. We've got rules for the options, and we buy shortly after the open. His sell time is 4 minutes before the close. He basically bought the open, sold the close, and made $6,500. That is why this is a typical trade. Our system tells you what stocks to consider and when to buy them, and it's fairly simple, right? You do not need to read a chart to use my system. Having said that, if you read charts, you can make even more money, right? Wanted to let you know, I traded Salesforce.com today. It was on your list. The list refers to my newsletter. If my math is correct, I realized 500% on this trade. This was virtual trading. See attachment and make comments. I still have to watch 3 DVDs. Now, I say this is typical, partly because he hasn't watched all the DVDs yet, but he's making 5 times his money. Right? We give you a number of videos to watch. Right? We teach you how to do this, and it's very systematic, and you can catch on. But I think the beauty of this is that it's typical that he paper traded. Right? He virtually traded first. Understand, if somebody comes on here and says, hey, look, Apple's going to $250 a share, it's $125 a share today, he says, I can pretty much guarantee you that a year from now it's going to be at $250. What do you got to do besides wait a year? My system, I show you on one weekend what's going to happen the next week, and we review the following weekend. You can paper trade it, right? You don't have to risk money. Paper trading is where you take either a computer and you type it in, or a piece of paper and a pencil, and you write down, hey, I am buying the Salesforce.com options today at this price, right? And then I'm going to sell them at this price, and you see how you did. You risk nothing but your time, maybe a little lead in the paper, right? The beauty of the system is you can practice without any risk. You can see if it works for you. Remember this, you can see if this system works for you without risking anything but your time. We keep the risk at a minimum. All right? But before we get to risk, let's talk about reward, risk reward. Right? I don't like a setup unless it can make me at least a minimum of 100%. That's my rejection. If I can't double at a minimum, I pretty much ignore it. Now, there's probably a few exceptions to that rule, as all rules maybe have exceptions, but we focus on trying to make a minimum of 100%. And we do it without skewing the risk, right? Understand, with an option, you buy an option, you have to be right, and you have to be right on time. You can't buy an option that's going to expire today and the stock move 2 weeks from now, right? And so we're buying short-term options because the time is low in them, which means the time value is low, which means the time decay is low, and we're able to buy options for penny a share. Freeport-McMoran, you can look this up, the $19 put closed yesterday at 9 cents. It hit 35 cents today. Darn it, that's a penny short of quadrupling in price. But at 9 cents, it is 1 penny short of our dime target that we use to buy FCX options. The first three letters of the pull system, PUL, this is how we pull money from the market. It's all based on math. I've made an Excel spreadsheet. You can simply import data from Yahoo Finance, free on the internet, plug it into the spreadsheet, and then you can see all the formulas, and it'll tell you which stocks to consider and which stocks to reject. All right, I give that spreadsheet to my students. In reality, you can do it. You can put all 400 stocks in there week after week, or you can just go to my newsletter, and I do the work for you. Right? PUL gives us our watch list. It gives us the 24 or so stocks that we focus on. It's probably up to 36 stocks now. We whittle that list down, right? We whittle that list down to our top 5 because of a setup, either a stock-specific setup, right? I might find a technical reason to buy a stock like VXX. I bought VXX calls this week because VXX was below the lower Bollinger Band, right, on Tuesday, and we have rules for trading that stock. That's a stock-specific setup. The guy well, we have market-wide events. The first Friday of each month is non-farm payroll, right? Next Friday is non-farm payroll. The problem is next Friday is also a market holiday, a Good Friday. So we have setups for a stock. We have setups, for the market as a whole. We now have strategies. We have 2 core strategies, right? We have directional. Buy a call if we think it's going up, like I did on VXX this week, right? Buy a put if we think it's going down, or we can buy a put and a call if we don't know what direction it's going, but we know it's going to go some direction, right? Non-directional strategy. A straddle is a call and put with the same expiration with the same strike price, right? The $83.50 straddle on Schlumberger yesterday was $1 near the close, right? The put traded for over $1 today. Right? A straddle is a non-directional bet the stock will move. Right? Schlumberger didn't move a whole lot, so that option pair didn't make a whole lot. It probably made 25% overnight. Terrible. Overnight's probably not short term, and 25% is not fantastic. But it is a trade that I had students that made. Now, a strangle is a call and put, same expiration, different strike prices. A strangle will always have a lower strike price put than the call, but again, always the same expiration. A strangle is a non-directional bet the stock will break out, right? A non-directional bet the stock will break out. So someone said, hey, you showed this Amazon call option today. What made you pick it? And the answer is, it's part of a strangle. It's the call portion of a strangle on Amazon. It fits the rules. E is events, right? We can have a stock-specific event, such as an earnings report. We do not buy our options before earnings. They are a bad deal. Event could be market-wide. Again, non-farm payroll. So here's an email from a student. I read your newsletter and decided that Triple Witching Friday sounded too good to be true. By the way, Triple Witching Friday happens 4 days a year. The 3rd Friday of March, 3rd Friday of June, 3rd Friday of September, 3rd Friday of December. Right? We have about 25 days that I can tell you 2, 3, 4, 5 years in advance that you want to take off from work and you want to trade. Right? You do not need to trade 5 days a week, 52 weeks a year to make money. Right? I can tell you years in advance the days that you want to trade, right? And I tell you that in my book. Anyway, he said he had a fantastic 2 months of trading that could cover a year's worth of income. So on Thursday before the close, I made my moves. Again, we look at specific times. We look to buy, if we're going to trade that same day, we look to buy near the open. If we want to hold overnight, we look to buy right near the close. Total net profit for 4 hours and 15 minutes, $66,850 in 1 day. right? That's a pretty good day. Earnings. This is from just a month or so ago. LinkedIn. This is a student's email again. This is not me. He said the 267.50 call after the stellar earnings. Again, we do not buy our options before the earnings. He bought them for $1.45, and he sold them at $4.55. Now, real quick, it's 6:34. This student is in Pacific time zone. He bought them 4 minutes after the open. Right? We don't buy at the open, but we buy near the open. And he sold when he hit his target price. I think he was basically just trying to triple his money. Right? Again, same student. He bought the Twitter 46.5 calls after the earnings. Right? He bought them 5 minutes after the market opened for 61 cents, and he sold them for $1.45. Shame on him. Shame on him. He did not even get 2.5 times his money. Again, I think you'll agree that a couple hours is short term. You might disagree that 200% is fantastic or not. All right. E, besides events, is entry. You have seen that I show you a lot of times we buy at specific times of day. We also buy at specific prices. And we have rules as to when the prices. And if you follow the rules, you do not need to learn how to read a chart. If you know how to read a chart, you have an advantage. It is not a necessity, right? But E is also for exit. Now, we can get out with a target exit, or we can get out with a trailing stop, right? If the stock goes our direction, we could put a stop loss underneath it. If it continues going our direction, we raise our stops and we ride it out. PULSE. It's an acrostic. It's a memory tool. It's if you know any pilots out there, right? Pilots have checklists. They want to follow a checklist, right? You put your wheels down before you land. It's on the checklist, right? We've made the checklist simpler by making it something that you can remember. We've made it even simpler still by writing a newsletter that comes out every weekend, and in that newsletter I pick stocks, right? The top 5 plus or minus, literally 5 setups plus or minus. This week it was only 1 setup, but there were no scheduled market-wide events this week. There were no stock earnings events. There was nothing going on. We picked one, it hit, right? Got some students that made 50, 75%. Shame on them, because others probably made 200 or 300%, right? In the newsletter, I give details. I go into the stock. I tell you specifics, right? This is from a year plus ago. I wrote, this is regarding Tesla's earnings, right? And again, we trade after the earnings, not before, because we have conditions the stock has to meet. One of the conditions on earnings, we need the stock to gap. I don't care if it gaps up or down, but it needs to gap. If Tesla gaps up, I feel the reversal has a higher likelihood of being the better trade. Right? Reversal means if it goes up, it's going to reverse and then come back down. I said if Tesla gaps down, I feel the continuation has a better chance. I said basically if Tesla gaps down, it's going lower. Both involve buying the puts. As always, you can hedge yourself by trading strangles, buying a call and a put. So basically, Emperor says, hey, if Tesla gaps, buy the puts. If you don't believe me, or if you're nervous, or if you're new, right, buy a call and a put. So later that week, Tesla announced its earnings. It gapped. Here's a student at 9:39, right? 9 minutes after the market opened. Basically that time of entry. He says, I bought 5 contracts of the Tesla $143 put for 42 cents. That's $42 a contract, 5 contracts, $210. He said, I placed an order to sell at $1.50 and left. My order was filled 2 minutes later. Now, I think we have officially proven that my system is short-term when we have a student that tripled his money in 2 minutes, right? I'd like to think tripling is fantastic, but I know 2 minutes is short-term, right? He mentions I suggested puts no matter where it opened, and it worked. Different student. As a newer student of 3 or 4 months, I had a great week trading your system. Here's my results. Newer student, he went from paper trading, right, risking his time and ink and paper, to buying 1 contract only, right? That's the minimum. He bought the 149 put for $1.38, which is 138 bucks. He sold it for $6, which is $600. Again, now a couple things. You see that one guy bought the 143 put, one guy bought the 149 put. We have rules as to which option you buy based on your risk tolerances, based on your account size, based on your experience. These guys have slightly different personal stories to say, and so they have different options they bought. Understand one thing. We leave money on the table. I look for moves of a minimum of 100%, because if I buy if I don't buy the low and I don't sell the high and it moves 100% and I can only make 50%, well, that's still okay, right? We call this sloppy slop, and sloppy slop works. There are a number of stock trading systems out there that require you to execute perfectly, right? Some systems have you optimize, and my answer is any system that requires you to input perfectly is a system that's doomed to fail, because you can't input perfectly, right? You can't do that. So we look for moves that are so big that if you get a portion of them, you're happy, right? Remember the first email? He went from 42 cents to $1.50 in 2 minutes, right? Here's a chart of that option, right? And on the chart of this option, in the lower left is his purchase, right? And his sell, because he was only in it for 2 minutes. He bought it for 42 cents, sold it for $1.50, and the next day, right, or excuse me, 2 days later, it traded for $10, right? So his options went from $42 a contract to $1,000 a contract, but he was only sold them for $150. He was excited he tripled his money, but he could have made, what is that? Tell me some math here. More than 20 times his money, right? Again, the Pulse system, I wrote a book, How to Turn Pennies into Hundreds of Dollars Trading Options. I filmed a number of videos. I write a weekly newsletter. The newsletter has the watch list where I take the 400 plus stocks and whittle them down to 20 or 30 or 40, somewhere in there. But I whittle it even further to the top 5. We always review the previous week, and all along we're educating. All along we're educating. Now, a couple in the question box, a couple of my students said, hey, I'm one of your students, I'm here. They know I educate. And I like to think they agree that I'm a pretty good writer, right? I've written hundreds of articles. I've written travel articles for magazines. I've written a bunch of stuff. I consider myself a pretty good writer. I have one of the highest retention rate of all newsletters published. I understand I do not publish my own newsletter. I have a publisher who publishes my newsletter, right? I write and I trade, right? The newsletter sent out each weekend, sometimes earlier on Saturdays than others. I think in the years and years and years and years that I've done it, it's probably come out on Sunday 2, maybe 3, possibly 4 times, but it generally comes out Saturday afternoon, give or take. And in my newsletter, I try and teach you to exploit a goal. Excuse me, my goal is to teach you how to exploit a setup. I get amped here again, right? So I've mentioned FCX, right? We have a system to buy FCX options for a dime. That's a setup. One of the things we trade Schlumberger. Schlumberger is SLB. If you've never traded it before, and you read the name, it looks like Schlumberger. It's pronounced Schlumberger. It's an oil service company, and I've traded this stock for so many years, and people that trade it jokingly call it SLOB. SLB is the ticker. We add a lowercase o, call it SLOB. We're SLOB traders, right? And the reason you want to be a SLOB trader, by the way, right? You want to be a SLOB trader. June last year, 13 times moves. I mean, look at that box. We got 6 cents to 89 cents, 1,383% move overnight. Couple weeks later, right? This one closed at 7 cents. Again, our rules as a general rule, we try and buy at a certain time of day. We could buy at the close, right? Which this option closed at 7 cents. You can see in the highlighted box, kind of in the upper left, and it opened at 7 cents. There was not a big overnight move, but it traded up to 70 cents, which meant it moved 10 times higher in price, and then it sold off at the end of the day, closing at 20. So if you just bought the close of one day or the open and held it to the close of the next day, you went from 7 cents to 20 cents. But if you could have been there and used a trailing stop, you should have been able to get more of the 70 cents. Again, June of last year, right? Here's a week later. This is a bit better percentage. Again, this is 2,900% overnight. 2,900% overnight on Schlumberger. By the way, I talked about Schlumberger in June of 2014. I talked about it in June of 2013. I'm sure I talked about it in June of 2012, and I'll talk about it in June of 2015. We trade Schlumberger over and over again. It is a setup that I teach you how to exploit. All right, here's an email from a student. Thanks, Chris. I got into SLB earlier in this morning and got out with a $1,000 profit in 15 minutes. Again, I think you'll agree that 15 minutes is short term. I'd like to think that you'll think that $1,000 is a fantastic profit. I enjoyed your service very much. Too bad I'm not a day trader. Thanks again, TAK. Now, I bring this up because he bought it in the morning. He got out that day. And some people say, oh, the day trader, there's regulations against day traders. And there are rules regarding day traders, but if you read the rules, right, first of all, if we buy it on a Thursday and sell it on a Friday, that's not a day trade, right? If you buy it Friday morning and you sell it Friday morning, that is a day trade. You are allowed a certain number of day trades in a certain period of time in a margin account. If you open a cash account, right, because you can't buy an option on margin, you have to pay cash for it, so you don't need a margin account. But if you buy an option in a margin account and you sell it later that day, it is a day trade, but cash accounts are exempt from day trading regulations, right? Again, I like the people to get in, get out, and make a whole bunch of money, then go enjoy their day. But we can avoid the day trading regulations completely by buying close of one day. Here's an option closed at 40 cents. It opened the next day at $3, right? So how long were you in it? Well, I guess you can say you were in it 17 and a half hours while you were, part of which you were sleeping. But market time, you could have been in this option 10 minutes. Now, mind you, it went up to $4.35. But if you bought it at 40 and you sold it at 3, right, and you made, what's that, 7.5 times your money, I think you're okay with it. All right, here's another one, 25 cents to $2.80. Here's another one, 16 cents to $2.24. Again, these are overnight. Here's an email from a student. He said, I've been a student of yours for 4 months now, and yesterday, Friday, 10/17, I officially became a SLOB. Right? I bought the 95 strike price puts at 14 cents. That's $14 a contract. It says he simultaneously set an order to sell at 56 cents. Right? If you're good at math, that's exactly 4 times what he paid for it. It says at 10:15 ran out to do some errands and get ready for a business webinar at noon. I peeked at my trading account at 12:40 and my sell to close order had been filled for a 333% profit in less than 2.5 hours. He says with sloppy slop, it got up to around 90 cents, right? And it closed at 66 cents. He realizes that he's sloppy, but he also realizes that he had a business webinar that he had to go to. And then he finishes by saying he only wished that the business webinar was nearly as interesting and informative, right? He is a happy camper. He says, thanks for your training and very interesting newsletters. Again, I like to make my newsletters interesting. People say, I'm new at this. How long does it take to learn? Well, I'm going to say it took him 4 months. I might have taken him less than 4 months, but it took him 4. All right. SLB, right? Multiple oh, it says multiple entries. You get in at the close of one day at 9 cents. Get in the open the next day at 10 cents. It goes up to 87 cents. That's 800% plus move. Again, you can see these screenshots on Schlumberger. It's not like, oh, we hit Schlumberger once. We hit it over and over and over again. Another email from a student. Subject, my newest best buddy. I don't know if I'm his newest best buddy or if Schlumberger is his newest best buddy. Want to let you know one of your students rang the bell with a really nice gain with SLB. Felt some shivers of greed hitting me. Right? He said he bought the $96.95 strangle. That is the $96 call, the $95 put. Again, when we buy a strangle, it's same expiration, different strike prices. The put is always at lower strike price. He bought it about 1 o'clock yesterday. I don't know what time zone he's in. I apologize. He purchased the calls for 50 cents and the puts for 58 cents. Right? $1.08 for the pair. He sold the calls for $3.10 and the puts expired worthless. Right, paid $1.08 for both of them, sold one for $3.10. Right, didn't quite triple his money. Shame on him. Shame, 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 shame on him. But great example. He didn't know if it was going up. He didn't know if it was going down, so he bought the pair. The stock made a big move up. He sold the call. Right. Now, if he happened to be in Pacific time zone, around 1 o'clock is right at the close. And I should have looked that up. I apologize. Different email, different student, right? I would like to thank you for teaching me how to trade Schlumberger. I've been trading for almost 2 months with success. I'm up over $15,000 to date. Says I basically trade with strangles. He doesn't pick direction. I'm amazed how consistent it works. It worked from yesterday. He waits for the price to between two strike prices, right? That's one of our rules. We either buy at a certain time of day or when the stock's at a certain price. In between strike prices is one of those prices. All right, he says, my question is there any other securities that trade similar to SLB? Is this the only one with this unique feature? My answer is it's not the only one with this unique feature, but if you've made $15,000 in 2 months, do you need another one? All right, ask yourself that. If you can make $15,000, $7,500 a month, which extrapolates to $90,000 a year trading one stock, do you need to trade them all? How about a more recent trade? How about last week, FOMC day, right? P-U-L-S-E, right? E is events. S, strategy. This option, Schlumberger option, opened for 6 cents, traded to 72 cents in 1 day. Again, I like to think that's short term. Here's an example of short term. This Schlumberger option went from 2 cents to $1, right, in 15 minutes. I think that's fantastic. I think that's short terms, right? While we trade short term, right, and often we get in, you know, Friday morning or Thursday near the close to trade on Friday, we have examples here. Here's an Apple option, right? This is from a while ago. We had multiple entries, Monday, Tuesday, Wednesday, and part of Thursday morning where you could have got in for 50 cents or less, right? The low was 17 cents. If you wrote it to Friday, you could have got out, you know, as high as $7, right? Again, short-term gains. We also, in the newsletter, we will talk about longer-term setups, right? My VXX put options, I have been trading VXX put options 63 of my last 64 times, right? And typically when I buy a VXX put option, I buy an option that's 3 months to expiration. So here was an Apple option that I discussed in the newsletter, right? I said buy the option that's $3, right? And so this is the day, or the first trading day after my newsletter came out. You can see that the October option opened at $2.70. That's pretty close to $3. The November option opened at around $3, right? And they went up around 30% in a day. The beauty of the way I teach you to buy options, particularly the long-term ones, is that they become a self-pyramiding position, right? If you have ever learned about pyramiding a position means throwing more money at it. Not with my system. You don't throw more money at it. You let it gain on its own. Right? This option took 3 weeks to go from $3 to $23. Right? In the newsletter. The newsletter is part of the Pulse system. My book, my videos, the newsletter. Again, watch list. I do the simple math for you. I give you the spreadsheet so you can do it on your own, so you can double check. I whittle that watch list down to the top 5, and I'm constantly reviewing and I'm constantly educating. Right? And so I want to give you the opportunity to become my student. Right? I want to give you the opportunity to get my book, to get my videos, and to get my newsletter, for me to educate you and for me to give you a bonus video. All right? And what are the reasons to trade options? Well, they're the same reasons to join Pulse options. How much do you use, right? As low as a cup of coffee, right? How much could you lose? You could spill that cup of coffee, right? And in reality, how much does it cost to join? It's $97. For $97, you'll get the book, you'll get the videos, and you'll get 3 months of my newsletter. We like to automatically renew you for another 3 months at another $97. The $97 is not a loss leader. We don't go from 97 then jump you to $497 or $297 or whatever. It's $97 a quarter. I do not ever put my system on sale. It's $97 a quarter. If for some reason I do decide to raise my rate, which I think I should because I think it's too cheap at $97 a quarter, and the publisher has said let's sell it at $97 a quarter. If for some reason I do raise the rate, you will be grandfathered in and you will not have to pay any more than $97 a quarter. So a couple of things. This is Real Traders webinar, right? The link is realtraderswebinar.com/pulse. You today sitting there are either a real trader and I can help you become a better trader, making more money in a shorter period of time, or you're not a trader and you want to become one. If you're not a trader, here's the test to see if you can trade. You have to be decisive. When you see a deal, you have to buy it, right? If I show you for 2, 3, 4 years that FCX options at a dime are a deal, and you will not risk $10 a contract, you will not make any money. You have to be decisive. You have to take action. You have to take a calculated risk. So to me, the test of being a successful trader is buying my course, becoming my student. Because if you can decisively risk $97, right? If you can risk $97, you can make a lot of money. But if you can't risk $97, you ought to just quit. Don't listen to any other presentations from any other speakers, right? Because you do not have what it takes to be a trader. Now, some of you might say, you know what, Chris? In this hour, you showed us all this good stuff. I'm skeptical. And then you know what my answer is? I will take away your risk, right? You have to be decisive. You have to take action. You have to risk your time. If you sign up and be my student, I will give you a full money back guarantee. And our guarantee is if you can't double your money 20 times in 20 days, we'll give you your money back. 20 times in 20 days, we'll give your money back. Now, what this does not mean you're going to take $100 and turn it into $200 and turn it into $400 and turn it into $800, $1,600, $3,200, $6,400, right? $12,800, $25,600, $52,000, $104,000, $208,000. No! I'm going to show you that we can buy an FCX option and double it. Right? We can buy a Schlumberger option and double it. We can buy an Amazon option and double it. Right? You don't want to put tens of thousands of dollars into a trade, albeit the one student I showed you bought $7,500 worth of FCX options, but guess what? He had made far more than $7,500 being my student. He was risking his profit, but not all his profit. If you can't make 20 times your money in 20 days, I'll give you your money back. Even if you don't try, right? So I've taken away your risk. You have to then be decisive, take action, buy the course, right? And again, I want to make it a little bit better. I've got just a couple minutes here. Couple things. I write for this publisher. I have a number of different publishers that either sell my books, my videos, the newsletter. One of my publishers, I made a book, right? I called it Polarity Trading, and he sold that book for $149 for the book, and people bought that book. And he decided to go from physical DVDs to getting videos delivered, online. And he offered the existing inventory of DVDs for sale, and the publisher of this newsletter bought that video out. And so I was hoping he would then sell them at $149, and his answer is to give them away for free, right? And that bonus video is the Daily Options Paycheck Exploring Polarity Setups. I have not mentioned any of that trading system here. It's a little bit more advanced trading system, but you can get it for free if you take advantage of this offer. Again, it's $97 per quarter. We will like to set you up for an automatic renew. You can quit at any point in time. If you can't double your money in 20 days, 20 times, we'll give you your money back. Now, again, this is a little bit over the top. I've got just a couple minutes. I'm going to look at the questions, right? And some of these times the questions go too fast. How much time, again, do you need to spend to trade Chris's way? Well, if you follow the newsletter, the newsletter is generally 15 to 20 pages each week, and it should take you 10 or 15 minutes to read. I got some students that read it over and over again, right? I send you a number of videos, and some people watch the videos over and over again. And quite often, I want people to watch the videos more than once, because write down the questions as you're going through it, and sometimes the question's going to be answered later on, and then when you watch it the second time, you're helpful. Now I got a question: can we trade SLOB from anywhere? I have a student I just talked to last week in Saskatoon, Saskatchewan. He bought a GDX option for 4 cents, and he sold it for 64 cents a day later, right? 16 times his money in Canada. So I know you can do it in Canada. I'm not sure where you're at. What if you're new to options? Some of the videos, we teach you exactly what an options is. I mean, if you're new to options, you don't have bad habits you have to break. Right? Someone says, what's your overall win-loss ratio? Well, a couple things. It depends how you look at it. If I buy a strangle, which is a call and a put, and like the student that bought the call and the put for 50 cents and 58 cents, sold the call for 310 and the put went 0, do you consider that being right half of it? Is that 50-50 because the call went up 6 times in price but the put went down? Or is that 1 for 1? So it kind of depends. You read my newsletter, you'll see that I'm well above 50%. How much capital do you think you should have to trade this way? I have students with accounts of less than $1,000. Bottom line, if you have a small account, there is nothing else out there that will turn you into a big account besides my system. All right, couple people are asking some of the questions, the same question, a similar way. Is there detailed mathematical analysis in your book? Yes, I teach you arithmetic. How do you predict explosive moves? It's part of the system. That's, James, you want to know how I predict explosive moves? Risk your time to read my newsletter, to watch my videos. If you don't think it can be done, send it back, we'll give you your money back. The answer is the course. All right. Again, I think it takes very, very little time. I think Kevin's going to kick me off here. I apologize for going long. Let me just see if there's any fantastic question to ask. What are your 3 secret signals to find better trade? Right stock at right time at right price, and we mathematically show you all of those. I won't be able to trade real money for 6 months. Will you be available then? I have been doing this for years and years and years. I started, being paid to teach people to trade back in the 1990s by the company that became Invest Tools. I will be doing this years from now. I cannot guarantee you that the price will be the same, right? I believe it should be more. My publisher says, sell it at this price. But again, if you sign up, you will get to be able to renew automatically at the same price. And if you can't trade real money for a while, learn the system for a while. You can trade this without real money and learn.